If you've been wondering what's really going on in our housing markets right now, amid all the headlines, opinions and predictions, then you're going to love today's episode of the Michael Yardney podcast, because the latest data is in and the news is good for property investors and homeowners. House prices rose across all capital cities in July, yes, all 8 of them. And we've now had 5 straight months in a row of growth nationally. The median capital house price is now sitting above $1.2 million. And I want to discuss with Dr. Andrew Wilson, Chief Economist of My Housing Market, what's driving the ongoing resilience. Is it just a short-term bounce or a sign of sustained momentum? We're going to analyse the latest July data in today's show. We're going to talk about why Brisbane and Perth continue to outperform, what's behind Melbourne's recovery, how the surprising upside has occurred in Darwin and Canberra, and how lower interest rates and rising consumer confidence are setting the scene for a strong second half of 2025. So whether you're a seasoned property investor, a homeowner, just keeping tabs on the market, or someone looking to get their next move right, today's episode of the Michael Yardney podcast should give you some clarity in today's dynamic market. So let's get on with my conversation with Dr. Andrew Wilson.
Welcome to the Michael Yardney podcast, where twice each week you will learn a number of new ideas regarding success, property investment and money in around 30 minutes. Our show is brought to you by Metropole, who specialise in helping you grow, protect and pass on your wealth through strategic property and wealth advice. Now here's your host, Michael Yardney, Australia's authority in wealth creation through property, who has been voted one of Australia's top 50 most influential thought leaders.
Australia's housing markets just keep marching forward, and the latest numbers are in. Today I'm joined by Dr. Andrew Wilson, Chief Economist of My Housing Market, to break down their latest July housing price report, and it's full of good news for homeowners and property investors alike, but maybe not for first home buyers. You see, house prices have risen in every single capital city over the month. That's right, all 8 capitals posted gains, and now it's 5 months in a row of rising prices nationally, with the median capital city house price sitting at over $1.2 million and an annual growth of 5.9%. At the same time, unit prices are also on the rise, and confidence is building as the latest inflation figures suggest an interest rate cut in August. So let's dive in. The property market's building momentum, and this is an update you don't want to miss if you want to really understand what's happening in our housing markets. Hi, Andrew.
Yeah, good day, Michael. And as you mentioned, another positive month, probably not a real surprise for our capital city housing markets for both.
Well, it's not a surprise, because each week in our Property Insiders chat, we talk about the market. And one of the very common leading indicators, auction clearance results, they told us this was going to happen, didn't they, the results?
Yeah, they've been very strong, particularly strong winter we've had for auction activity, Michael. We're actually seeing auction clearance rates pushing up towards 80% over the past few weeks. And of course, we start thinking about that B word when we see 80% consistent, near 80% clearance rates, and that's the word boom. I'm not saying we have a boom at the moment, but we've certainly got a lot of upward momentum in house prices. And as you mentioned, all our capital cities reported higher house prices over the July quarter compared to the June quarter, even though one of those, Adelaide, was only up by 0.1%. Nonetheless, there is some consistency there in terms of growth, and similar results for unit prices. So we shouldn't be surprised, firstly, because lower interest rates always generate higher levels of affordability, and that works its way into confidence. And that confidence eventually becomes momentum. And I think we're going to see in this spring market coming forward a little bit of that FOMO energy coming out, the fear of missing out, because I think there's some Melburnians who'd be starting to realise that this market is on the move, that their market is on the move. And following a couple of years of quiet activity, I think that will generate some confidence in those that have been sitting on their hands for a while in that Melbourne market. But the other suspects are starting to do well again, and those suspects are Perth, Adelaide and Brisbane, which are really forging onwards and upwards. And it's interesting, particularly the Perth and Adelaide markets, which sort of moved into pause mode at the end of last year and into the beginning of this year. But certainly those lower interest rates have reinvigorated the house price cycles in those capital cities, and they're looking to have similar results double-figure plus results again this year. And, Michael, I think we're set for maybe higher prices over this year than we've had for a few years. I think that we may exceed what we've recorded over the past couple of years in terms of national capital city house price growth.
Well, the Reserve Bank cuts of February and May clearly energised the markets. It improved affordability, but much more than that, it actually brought buyer and seller confidence out. And now, the day we're recording this, the latest CPI figures came in, and the Reserve Bank must be happy with those, Andrew.
They were exactly what the Reserve Bank would have wanted. We're now starting to see some consistency with the inflation rate within the target range. Of course, the target range 2 to 3%, and underlying inflation, which is the preferred measure for the Reserve Bank, is stuck right in the middle of the target range. And I think the interesting thing is the Reserve Bank said last month at its meeting that it was waiting for the quarterly data. It has consistently said that its focus is on the quarterly data set. It has come through now. There are no surprises there. Perhaps we have anticipated, and we've discussed it here, that when we look and focus on the monthly data, it has been showing a consistently low trend. So it's no surprise to us, really, that we've seen another low number. And in fact, the June number was also quite low, in fact, lower than the May number. So we've got some momentum running through on a monthly basis, which augurs well for what happens over the next period of time. And just on that, Michael, it's interesting to note that the ABS has announced that it's no longer going to run the quarterly data set for...
Yes, that's right.
And that from November, they'll be publishing the October monthly data as the single set. There'll be no more quarterly data sets. And from November onwards, which will start with October, we will only have the monthly data set, which is good news because it was really a little archaic, backward looking, and most of other major economies do focus on a monthly inflation rate. But as I said, that monthly rate, which was also released this week, is positive news going forward for the prospects of that consistent within the target inflation rate, because again, it was lower than May. So, it's almost, would we say, a certainty. We get an interest rate cut next month, but of course, there are a lot who thought it was a certainty last month. Not everybody.
Exactly. The Reserve Bank quarterly data looks back, and the world's changed in that time. But in a moment, I'm going to ask you to go through the My Housing Market national prices. And even though they're labelled as quarterly, they're actually not really. So if we could just explain to people, it's a month-on-month change, taking a quarter's worth of data, which gives you a much more robust baseline, doesn't it?
Well, that's right. Well, particularly in the smaller markets, we really do need a robust number of observations of sales to get a less volatile type of outcome. It is just the raw data we use here. There's no seasonal adjustment per se. So some seasonality does come into it at play, but it is at the margin because we also use the compositional adjustment process that the ABS used with their previous house price series. But we take 3 months of data and then we advance it on a month-by-month basis. So this month's results are the 3 months to July, and then we compare that to the 3 months to June. So it advances month by month, but we are taking 3 months of data just to avoid some of the volatility that we see that is inherent in the monthly data sets, the pure monthly data sets, which have to be really adjusted with different types of methodologies. So, look, it's been an interesting month in terms of price outcomes. The national median house price was up by 0.7% over the July quarter compared to the previous June quarter.
Well, so it's over a month, really. And if you multiply that by 12, and that's not a good way of doing it, but boy, that'll be a good result for the year.
Absolutely. And we had a 1% increase over the June quarter. So it's down a little bit, Michael, and that the rates of growth aren't as strong, while still very positive, aren't as strong as they were over the previous quarter. And I think that's the effect of July being a holiday month. Of course, most of July is taken up with school holidays. And that means a lot, particularly of higher priced properties. We don't have the same proportion in the marketplace because a lot of the higher end of the property market takes a holiday through July. And hence we get a little bit of seasonal adjustment occurring. But at the end of the day, it's, 0.7% versus 1%. And as you mentioned, when you annualize 0.7%, you actually get back to the annual rate of the last 2 years of prices growth. And of course, we're not accounting for another likely near-term interest rate cut, which will only accelerate prices growth, add to confidence, and improve affordability. But yeah, when we look at the breakdown of the particular markets, all the capital cities, as I mentioned, recorded increases in the median price over the July quarter. Just mentioning that the annual growth rate, as you said, is up 5.9% now, and as I said, likely to increase, approaching levels of last year already. Darwin, which has been a resurgent market, was the top performer, up by 3.7%. Canberra has also started to revive, as we've seen.
Yes.
Auction clearance rates, we've sort of been preempting that. Brisbane, Perth, consistently strong. Each were higher by 1.9%. Hobart also in revival mode, up by 0.8%. Sydney and Melbourne in slightly less terms, up by 0.3%. But just adding to that seasonality impact, Sydney and Melbourne are more likely, Michael, to be impacted by seasonal or July effects through holidays, because they have a more substantial prestige market. Of course, they have the most substantial prestige markets, particularly as a proportion of the overall mix. So no surprise there. And Adelaide, the underperformer, up by just 0.1%. So that could sort of fluctuate. Annually, we're seeing the sort of same old results in terms of the leaders. Perth up 11.2%. Darwin, as I said, which has rebounded quite strongly over the past year, up by 10.6% after a lengthy period of slow growth. And then Brisbane and Adelaide up respectively by 9.9% and 7% respectively. And certainly those big three, Michael, are closing in on similar results, perhaps even better, given further interest rate cuts than they recorded last year. Just back on Perth, when we look at the 2-year results, Perth house prices are still up by 40% over the past 2 years. You mentioned first home buyers. That's sort of the worst news that first home buyer could likely have, is that house prices rising by 40%. Similar results for units. Units have actually increased now over 6 consecutive months, the quarterly data. So they keep on keeping on. Not quite as high as houses, the growth rates in houses, but still a very robust result for units. Adelaide, conversely, was the top performer for unit prices, up by 2.2%. Canberra up 1.9%. Perth up 1.4%. Melbourne, which unit market in Melbourne is certainly on the rise now, up by 0.7%. Sydney up 0.2%. And Brisbane, a bit unusual for Brisbane, it was steady over the month after what we expect to see very strong results month by month, but just having a pause for over July. Hobart and Darwin, conversely, compared to what they've been doing for house prices, moved backwards over the month, but they are small unit markets, and we do tend to see some volatility from month to month, even though we are taking quarterly snapshots. Those unit markets in Darwin and Hobart are particularly small. And similar to house annual growth for house prices, annual growth for unit prices, Perth, Adelaide and Brisbane have led the charge. Perth up 14.5%, Adelaide up 13.5%, and Brisbane up 13.3% over the years. Pretty consistent positive results there, Michael. A momentum clearly within our housing markets. We know that with the auction results that have been rising over recent weeks, despite the fact that we're in the middle of winter or coming to the end part of winter. And as we've already discussed, an increased likelihood of an interest rate cut in a couple of weeks' time, which will only act to fuel housing markets.
If we look to the rest of the year, the underlying drivers haven't changed. There's still strong migration, shortage of accommodation, generally good economy, even though there's no doubt that some people are suffering and housing affordability is an issue for some as a cost of living. But overall confidence is there, and that's consumer confidence, buyer confidence is showing up in retail, but also at the number of people who turn up for auction. And that's one of the biggest leading indicators, as we said a moment ago. They're selling each weekend at almost boom time rates. So I guess each month as we look forward for over the rest of the year, can't see much changing.
Well, we've got the spring selling season coming up, Michael, and particularly in Melbourne and Sydney. That is the strongest part of the year for activity, particularly in Melbourne. So Melbourne's got a really good platform going forward, if you're a seller particularly, for increased activity. Melbourne's annual prices for units and rents are now back in the black after reasonably sustained period where prices were lower on an annual basis. They're now both for houses and units higher than where they were a year ago and certainly accelerating. And as we saw last week, Michael, Melbourne again recorded the highest clearance rate of all the capital city auction markets. So plenty of positivity there. And as I said, that spring market is always fertile ground for housing market activity in Melbourne. And as I said, we keep saying another interest rate cut will only put fuel on that fire.
Now, first home buyers may be feeling a bit lost at the moment and dejected, but I'd like to bring some perspective to this. In the last couple of days, I've seen two separate figures that still show that first home buyers are out there. PEXA, the organisation that does most of the conveyancing online, said that there are about 720,000 transactions in the last 12 months, in the last financial year. And separately, the Australian Bureau of Statistics suggested that there was around 120 first home loans approved last year. So that's about 16% of all transactions were still first home buyers. And Andrew, the government's going to put fuel onto the fire as they allow first home buyers from January next year to be able to get into the market with a 5% deposit if they can afford the service.
That's right, Michael. I think some of that data is backward looking, as you mentioned. We're now into an environment where prices are accelerating. That's not going to be good news for first home buyers, because that's the nightmare for first home buyers is higher prices. It's not just higher prices, it's the fact that there's more people who are, as you said, attending auctions. And so there's more competition for available properties, and particularly more affordable properties as prices rise. So, that's not as good as we would expect of first home buyers, lower interest rates. Even though it means they'll repay less, it means they'll have to borrow more in a relative sense. But I think one of the other positives...
And compete with investors in the same price bracket, aren't they?
That's right. And I think that's one of the positives also for first home buyers has been that we haven't seen the rental increase that we had in previous years. That's not eating into their potential savings for deposits, even though it's still quite high. We're not seeing that acceleration. But yeah, look, it's always problematic, isn't it, that lower interest rates are better for first home buyers because they don't have to borrow as more, but it means that they're going to have to pay more because there's so much more energy pushing prices up in terms of higher levels of buyer activity.
Well, that's the news for this month. We'll be back every beginning of every week with our regular Property Insiders chat, and it'll be interesting in a couple of weeks to see what the Reserve Bank does, Andrew.
Yes, it will, Michael.
If you're a regular viewer or listener to this podcast, you know that we have a little bit of fun each week by introducing a property trivia question, and 3 listeners or viewers are going to get a free hard copy, a real book, Michael Yardney's Guide to Investing Successfully. And everyone who enters the competition gets an updated report. So you can enter as often as you like. Go to propertytrivia.com.au, and I'm going to give you another simple true or false answer. And it doesn't matter if you're listening to a slightly older episode, your entry will still count. So here's this week's question. Simple, true or false? Homeowners in Australia pay capital gains tax when they sell their principal place of residence. True or false? Homeowners in Australia pay capital gains tax when they sell their principal place of residence. Almost couldn't say it. Go to propertytrivia.com.au. I'll leave a link in the show notes, and let's see if you're one of the lucky winners of Michael Yardney's Guide to Investing. As you heard in my chat with Andrew Wilson a couple of minutes ago, the property markets are likely to rise strongly in the second half of 2025 because of another rate cut or 2 coming. Now, the July rate cut, or that didn't occur, surprised a lot of people, but there's no doubt rates are going to keep falling further. The question is how often and when, and the market fundamentals still remain very, very strong, and they'll be boosted by the extra confidence when rates fall. We've got record population growth squeezing housing supply, first homeowner grant set to be unleashed in January next year, which is going to create a wave of demand. But the smart money is already moving back into property. But the next phase of the cycle is unlikely to lift all boats. Some locations will do very well and others will stagnate. And that's why I suggest you have a complimentary wealth discovery chat with one of the wealth strategists at Metropole. It's a no obligation session where we're going to help you clarify your financial goals, understand how all these shifts are going to affect your position, We're going to help you position yourself to ride the next phase of the property wave and explain how you can create, together with us, a personalised investment strategy. So go to metropole.com.au. I'll leave a link in the show notes, and let's see how we can get you into the market before everyone else realises the market has turned.
Now here's Michael's mindset message. Remember, a change in your thinking will lead to a change in your life.
In today's mindset message, I'd like to talk to you about courage. I want to ask you, do you have the courage to achieve your goals? I recently read a book called The 4 C's Formula, written by Dan Sullivan, the founder of Strategic Coach. In it, Dan talks about how to achieve success in life, and he lays out 4 stages, the 4 C's, you need to go through if you want to make your future bigger than your past. The first C is commitment. In order to achieve anything, Dan believes that you first need to commit to your goal. Simple as that. I agree. The second C stands for courage. Once you commit to your goal, you need then to find the courage to actually do it. Big goals are scary, so you'll need a lot of courage to overcome your fear. But it's not enough just to think your fear away. As Dan puts it, there's a difference between fear and courage. Fear is peeing in your pants, he says, and courage is doing what you need to do with wet pants. The third C stands for capability. Once you take that courage and you're doing the thing you're committed to, that then gives you new capabilities. And the more you do it, the better you become. And the fourth C, the last C, is confidence, which simply means the better you are at something, the more your confidence grows. Now, here's why I'm telling you all this. Almost everybody I come across wants more out of life, more in their profession, their career, their business, their properties, their investments in general, in life in general. But just wanting and thinking about it isn't enough. So Dan Sullivan says to get more, you have to become more and go through the 4 C's, the 4 stages: commitment, courage, capability, and then eventually confidence. It's not easy to do on your own. And that's why I still have coaches and I still have mentors. And that's why the successful investors that I see all have a great team around them to keep them accountable and to see their blind spots. While the average investor sees or tries to get mentorship for free on the internet or by listening to podcasts or YouTubes and videos, you can only go so far. Successful investors are prepared to pay for their transformation. They see it as an investment, not a cost. So my question to you, as I said at the beginning, do you have the courage to achieve your goals? Thank you for spending the last little while with me. I hope you got some benefit from this show. But before you move on to the next podcast you're going to listen to, let me remind you I have another show that I produce once a week with leading demographer Simon Kirstenmacher. We call that Demographics Decoded, where Simon and I unveil the trends that are going to shape your future. In my mind, this is a must-listen-to podcast for anyone interested in property investment, but also for business people and entrepreneurs. So if you don't currently subscribe to Demographics Decoded, just please stop for a second and subscribe on your podcast app where you're listening to this, or on YouTube. And of course, if you don't subscribe to this show, the Michael Yardney Podcast, why not click the link that says follow or subscribe wherever you're listening right now. So twice a week, you're going to get benefit from my guests and me. And I'd like to ask you a little favour, please. If you did enjoy today's show and you know somebody who would also benefit, please tell them about the Michael Yardney Podcast and Demographics Decoded. There's a share button on every podcast app. On Apple Podcasts, there are 3 little buttons at the top of the player. Or just tell them about it. Just have a chat with them. Now, I hope you're going to be doing them a favour, and you're definitely going to be doing me a favour in my quest to help as many people as possible to become financially literate. And by the way, I've got a special bonus for you. As my way of saying thank you for subscribing, just go to podcastbonus.com.au. There'll be a link in the show notes, podcastbonus.com.au, where I've got a bunch of ebooks and reports. It's just my way of saying thank you for taking the time to listen. And remember, the information that we give you in this podcast is general information, not specific information about your personal circumstances, because we don't know about them. But if you do want specific information, you can always have a chat with my team at Metropole. Go to metropole.com.au. If you really want to learn more, you can always listen to the previous podcast, the many episodes we've already published. Just go back to the old episodes, which each have lessons about property investment, success, and money. Once again, thanks for listening to today's show.
Thanks for listening to this episode of the Michael Yardney podcast, which was brought to you by Metropole, who help their clients grow, protect and pass on their wealth through strategic property and wealth advice. If you like what you heard and don't already subscribe, you'll find us on iTunes or on your favourite Android app as the Michael Yardney podcast. Watch out for our next show, which comes to you twice a week, and you'll learn some new ideas about property investment, success and money in around 30 minutes. To get more of Michael's thoughts, go across to www.propertyupdate.com.au and sign up for his daily morning briefing, and you'll hear from not only Michael but a group of leading property success and money experts. And just a reminder that the information you heard in this show today is general educational advice and not specific investment advice, as we don't know your personal circumstances. If you're looking for specific advice, why not ask the team at Metropole to help you?